Hello, welcome back to the video. As usual, I'm going to update you about the market situation, and then we're going to go through the individual stocks that was highlighted in the email. Okay, so the market situations that I refer to is the STI, Hang Seng Index, S&P 500. Maybe I just give you a brief update, and then before that, I am going to talk about just highlight stocks that the names of the stocks that I'm going to discuss after, right, referring to or analyzing this index. So what's happening now is that the email talk about a few stocks like AEM, and then REX, OCBC, Sembcorp Industry. And today I didn't highlight any stocks because I find that the market is indulging in irrational selling, and therefore we shall wait until it finish its joy in selling, then we go back to pick up some durians at the bottom. Okay, so like for example, AEM 12 October. So there are feedback saying that I shouldn't be highlighting opportunities that are related to breakout. So it's a bit puzzling because I wonder if you buy on this breakout at 352 because it kept out at 352, and you take this opportunity buying at just a mere 2,000 to 3,000 share, or let's take it as 2,000 share, and you're not greedy, okay, and you continue to hold this counter until you sell at around 367 or 368, knowing that 370 is the resistance. You're not greedy, you just sell. Of course, on hindsight, we've seen the stocks go up lah. But then if you took that opportunity and traded, so your trade will be yielding about, let's say you buy at 352, you sell at 368, you're making 16 cents. And you will be making, based on 2,000 share, you'll be making about 320. So minusing all the costs, you'll be making about 280. And if you take a 1-for-1 risk, okay, 1-for-1 risk, 1-for-1 risk means that if let's say you buy on the breakout, say 352, and then the stocks goes back in below the resistance and you cut. And if you were to follow my video, I do mention that a bullish pattern after breakout and immediately come back to the after below the resistance, out of 10 trades, 8 is not very good, okay, or about 7, 8 not very good, and you will cut. So if at 352 you buy and then you cut at around 344 or below, or 340 for example, so that will make you lose about 12 cents, and then you take a 2,000 will be 240 plus the cost, it will come about 290. So it's about 1:1 trade. So is this opportunity that you could be taking, right? So of course, in this market condition, all of us should know, because of the uncertainty, geopolitical issue, right? Buying a hold for huge multi-bagger profit at this time is not possible. So if you want a multi-bagger, you have to wait until the market moves into the uptrend direction, where it might happen not now, but maybe next month or end of this month, maybe, right? Hard to say. And then next January, February, some of the good stocks may recover back to their highs, and this is where you can make some more decent profit. But from now, the tension is very high, oil price is rebounding, means that inflation is going back up. So I would think that, going for an uptrend may be a little bit difficult now. So you need to take note of the position. Okay, So having said that, let's look at this STI first. So STI, right? My drawing previously was like that. So just do a yeah. So I anticipated this happening if it can break out successfully lah. So STI went and test the resistance and attempt to break out, but it did not break out successfully. And that was Thursday. So last Thursday, my video was everything was bullish because everything was going up. But Friday, it came gap down because I think there's escalation in the so-called Middle East war. And what happened was that the treasury yield is going up, means the US treasury yield go up. The stock market usually like to sell. And the STI now is on the way down. So the upside no more. So now we are looking at the downside. How low can it go? So looking at STI now is at a key support at 3094. So if you break this key support, then STI is going to go for below 3000. So maybe around 2966. So when you see this kind of situation, what should you do with your position? So if you are buying those good stocks, I think after this irrational selling, there's a chance for the market to recover definitely. And we are looking at this market Hang Seng. So Hang Seng sell off as well. As you can see that we are looking at this direction where it is moving. So the Hang Seng market is in a perpetual downtrend, and the situation seems to be a difficult one for the Hong Kong market because on every opportunity or when it rebound, market sell down, and whenever it start to turn uptrend, signs of uptrend, it got sell off again, go back to downtrend. So the Hong Kong market, China market is really a difficult market to go for multi-bagger. Probably it's just a trading market where if you were to be able to buy some stocks at the support level, once it hit some high, take profit. That is the scenario. Of course, there are various strategies to do so, and it can be done. It's just that you need to put in a lot of effort, a lot of observation to the market in order to make some decent profit. Okay, so that I would say I would just ignore the Hang Seng market for now lah. If I were to put in a lot of effort, then maybe I will go with the US market, right? US market, S&P 500. I have to use SPY to represent. Okay. So you can see that the S&P 500 has pulled back strongly yesterday. And now it's at the point where if it breaks down this lower, it is going to sniff up lower level. Okay, because there's a chance for it to continue lower to go down to this 4200 level. And the corporate result doesn't seem to be very bullish for all. Some the banks, the US banks mostly doing well, but Tesla result in the morning after market close missed expectation, and the market decided to tank the stocks. So that will have some drag in S&P 500, and with that, then we will be looking out for more signs that it is going to go down or it's going to go up. For now, it is bearish. So if you look at this pattern, it's very similar to patterns like this where S&P 500 rebound, and then boom, decided to sell off and go down lower. And pattern like this, where S&P 500 was on a nice 4-day rally before it boom, sell down, go down lower. So the other one that you also may want to think of is S&P consolidated here, boom, gap down, continue lower to the low. To hit the low range of the index, then recover thereafter. Okay, so what you want to note is it may happen again if it continue to sell down tonight and Monday hit this low and break lower. Maybe a rebound may happen towards the end of October, beginning of November, then form a double bottom and recover. If the Israel-Hamas war can stop. Okay, the last time they fought was about 11 days, and hopefully they can stop like in this within these few days, and then the market will be calmer. So why do I say that? Because now market is seemingly looking for excuse to sell down. Like Hamas, Israel war. This is not the first time they fight a war, but the market, and yet every time get panicky of this, and then treasury yield again, where the treasury will remain high, and then the stock market start to get panic again, fearing that interest rate will go up again. You know, all these are the factors that the market will be looking for to sell down. Okay, anyway, just watch your market closely, and it will be best that you can bottom fish some stocks. You don't need to buy a lot at the bottom. If let's say there's some signs of reversal, just buy a little bit, just in for a little bit of position, and then if the market manage to recover, at least you still make some profit. Okay, so here we are going to the emails now. So we have AEM, just talk about AEM condition now. So the situation for AEM now is there's a glimmer of hope where you can see a sign of rebound, but can it sustain high? Okay, so if you can close 360, then there is still chance for it to recover. So while the whole market is still on a selling, buyers decided to come into AEM to push it up. So definitely there's a chance but is this pump and then eventually decided to push lower the next few days? Right, this one is there's still a risk. Even in good times, there's always this kind of risk as well. So when it breaks 346, definitely will be a sign that you might want to avoid this counter. Okay, so counters like Keppel Corp, after market close tonight, announced results, and it come down to test support level, as I posted in the Telegram group. If you're in my Telegram group, then do take note, and then forming a hammer. So is this a sign that the result is not that bad? So yesterday selling high volume, definitely there are some fund exiting, not us, but many funds exited, I think. And if this is a hammer pattern, especially if Keppel Corp close at 627, then there is still chance. If not, it may be going further south, because especially this can be a topish pattern, and it can, break badly below towards as low as 524, right? That could be the worst case scenario if Keppel Corp choose to continue to sell down. Then we have SIA. SIA broken its key support level. Okay, and what we're seeing here is key support level is at this 609, and the next support level will be 578. So if you look at SIA, there's a trend line here, which it had broken, right? And when it breaks that trend line, that is a sign of selling. Because last week I did mention that if SIA were to go up, it has to go above this trend line, and I need to see that, but it did not. So it chose to close lower on Friday, and that's the point where, or Monday, that's the point where we already know that it's going to go down further. So if it's really going south all the way, then 578 will be the support to watch. Sembcorp industry is no better. Market just sell, and it is at the 200-day MA support. So let me turn on the 200-day MA support for you. 200-day MA support is 200-day MA? Yeah, 200-day MA support. So you can see the 200-day MA support is just right above. So today just broken it. And if it cannot close high, say at 465, then it will be a challenging time for this counter, and 427 will be the next support level to watch. So as I mentioned in the email, I was anticipating a rebound, if possible, for this bullish Harami pattern, and then the next day it just sell down all the way. So I don't even bother to look at any entry at that day, yesterday. Okay, so if you were to refer to the email, Sembcorp industry. So I'm looking at potential bullish reversal if possible. 498 will be the resistance, but the stocks just goes lower, right? And ST Engineering, the bullish flag pattern also become flat lowering pattern. So you can see ST Engineering lower is flag, nicely down, and no more flag anymore. So when you see there is no breakout and then there's a flag lowering, then you know that these stocks go back to its sideways, no more uptrend, so to speak. But it doesn't mean that it's all over for ST Engineering. So now you can watch for this support level at 381. So if 381 can hold, it may provide another opportunity next week. DBS here, you are looking at the stocks hitting the support level. So it has already broken down its trend line, and therefore there's a risk involved here, because nowadays whenever it trades below the trend line, it tends to continue go down lower with 200-day MA just below, slightly confluence with 32, 36 horizontal support. So you can watch for that, right? Support if it breaks lower. This is a major support that is resting right now. But in order for it to be bullish, you need to go back above and go into the trend channel. And then OCBC, the ascending triangle that I shared in the email, and I mentioned last week, did not pan out to be the one that we are looking for, because as I mentioned, if it go up and then come back into that formation, which OCBC is doing right now, make the pattern weak, and there's a high chance that it may negate. So OCBC today's closing is very important. Is this a hammer? Will it go back to retest a high at 1313? That remains to be seen. And then if it can test and break out higher than 1313 and go above 1317, then we still have chance for it to go uptrend. But the market is sentiment is very bad. Every day there are people calling me complaining that the market is very bad. I want to cut my hand, cut my finger, and don't want to trade the market again. So yeah, so these are the things that I would want to say this is not the first time, right? The market as a cycle, it always goes up and it tends to come down, and we have to embrace it. And when it's down, we need to look for opportunity to buy back again. So be positive, yeah. Okay. And next is that we are going to look at Rex. Okay, Rex highlighted in the email to break 187 if possible. Then there's a resistance to meet 2005. Okay, and let's look at Rex here. Rex International oil price is surging up. So Rex, you see, just nice rebounded from its 20-day MA, but got stuck at its resistance at 187. So the longer it got stuck there doesn't mean or rather it means that it may not be as bullish as we thought, or I thought. Okay, so got to watch how it trades here. So what it needs is to break out immediately to hit 19 and then move up to 205. Okay, so thank you for viewing this week's video. I will see you next week.